Welcome to the Fairview Capital Elements of Excellence series, where today we're going to be focused on the growing venture ecosystem in LA. I'm Mattamana, a principal with Fairview Capital, and I'm joined here in downtown LA today by Dana Settle, a co-founder and partner with Greycroft Partners. Greycroft is a leading venture capital firm focused on early stage as well as growth companies in the internet and mobile sectors. Dana has a long and successful career in venture. She was an investor at Mayfield before co-founding Greycroft in 2006 and has helped the firm grow to $600 million in assets under management across 4 funds. Dana has backed some category-leading companies such as Micro Studios, which was sold to Disney for $900 million, which we will talk about during this discussion in more detail, but also companies like Trunk Club, The Real Real, and App Annie. But most relevant for our discussion today, Dana heads Greycroft's LA office, which is one of 2 offices in the firm, the other being in New York, which gives her a unique both insider as well as outsider perspective on the LA ecosystem, which is what we would like to discuss today. Welcome, Dana. Thank you for joining us and for hosting us here in LA.
Thanks, Alan.
So let's start off by talking about the numbers. Venture investment in LA and Orange County in 2014, according to the Money Tree report, is expected to surpass $2 billion, a very healthy amount and one of the highest totals in over 10 years. And on a relative basis, it's grown to over 5% of total venture capital dollars in the country. From your perspective, what's driving some of this growth in the LA ecosystem?
Sure. Well, I guess in some ways I would say it's not surprising that there's this kind of growth in the LA ecosystem, and sort of it's almost more surprising that there hasn't been in the past, given that LA is one of the largest cities in the country, and New York as well. That really only 5% of total VC dollars invested here actually is probably more surprising. So therefore, I think that it will increase over time. And in addition to the fact that it's a large and diverse market, it graduates, the universities here graduate more engineering and students with technical degrees than I think the rest of the country combined. If you look at USC and Caltech and UCLA and Harvey Mudd, and so I think that all of the components have been in place for a long time, and I'd say over the last really sort of 6-7 years, it's just that all of the different constituents in the ecosystem have really started to work together toward kind of a common goal of making LA a real tech hub. And so, I'd love to say that it was when Greycroft started in LA that things really started to happen. Yeah. But it took a little more than that.
Well, we'll take us back to that time because we were privileged to be involved with the first institutional fund that Greycroft raised in 2008. Take us back to that time and the decision to be based in LA in the first instance, and how LA has changed in the subsequent 6-7 years.
So we started Greycroft in 2006 as a fund backed entirely by individuals. And at that point in time, we decided to start in LA and New York. My 2 partners were based in New York and I was based here. And we are focused on the digital media industry, which is really sort of native to these 2 markets, to LA and New York, for a couple of reasons. The real primary driver was that we just observed that, and again, it's not like rocket science, but that the cost to start a company or to get a product into the market had fallen so precipitously at that point in time, from sort of 2000 to 2006. Literally, it went from, probably costing, $5 million to really get a company launched and product in market to essentially, $100,000. If you just sort of think about removing people's time, but you no longer had to buy servers and racks. You could essentially rent all of your, hosting and sort of servers from Amazon on a as-needed basis, and so as that happened, the industries that were most logically sort of benefited from that were the digital media industries, because they could build kind of light products on top of that infrastructure for very little money. And I was fortunate to be involved with a company that was kind of an early company taking advantage of this change called Truvio, which was a video search company that I was the head of business development for, and the company raised $800,000, probably spent $500,000, and then sold to AOL within a year for $50 million, and that was in 2005, and that was sort of when the light bulb went off that things had fundamentally changed, and the markets where that most logically, sort of would, again, would benefit is these sort of application-light markets like digital media. So LA and New York being the hubs of media and advertising were, the two most logical markets.
And fast forward to today.
We also lived here, which was nice.
Right, that helps. So fast forward to today, most of those trends have only accelerated. And from a sector perspective, given LA's proximity to the entertainment and content creation industry, we think that content creation would be a real area of focus and investment for you. Talk about that as well as some of the other sectors that you spent time looking at.
Sure. So in the sort of media industry or entertainment industry, we've invested in some of the kind of early winners and companies that were early to take advantage of technology and scale their business. And so the Huffington, we were early institutional investors in the Huffington Post, which sold to AOL for $300 million. And in Maker Studios, as you talked about, which we sold to Disney, and then a handful of others that, Babel, which we sold to Disney as well, and paid content we sold to Guardian Media. So we have been investing in content businesses, and I think the opportunity for content is actually improving as essentially the distribution has opened up fundamentally with the advent of all of the online platforms. And that really has, I think, kind of opened up the creative world to a whole group of people to whom in the past it was fundamentally inaccessible, where it was really overseen by all of the studios, and very little content ultimately was created because of kind of the lockup of distribution. So even when we first started the firm, YouTube had just been acquired by Google, really the iPhone was just coming out. The iPhone came out in 2006, 2007. Now so if you think about the change that has occurred from 2006 to today, it's so fundamental in terms of distribution and consumption, and that's what's really creating opportunity for great new content creators to scale up businesses quickly and leapfrog the incumbents.
Dana, we've been talking a lot about content creation. How would you quantify the growth in that space?
Yeah, so it's interesting. In preparation for this discussion, I looked back just to sort of look at the macro of what was going on in the video space when we started the firm, and then also when we invested initially in Maker Studios, which has been, I think, a real catalyst for growth in the overall online video business, and certainly in LA. So when we started Greycroft, and YouTube had really just been acquired by Google in 2006, the ad spend in the online video space was $410 million. In 2010, the year we funded Maker Studios, that had grown to $1.4 billion. This year, that number is projected to be close to $6 billion, just to give some, sort of sense of the growth that's occurring. And that's still just a tiny percentage of the overall ad spend on a greater media business, if you think about television, film, et cetera. So we think that we have a long way to go.
And a long way to go, particularly in LA?
Absolutely.
Some of the other companies in your portfolio seem to be in the direct-to-consumer space, as well as SaaS-related companies. Talk about those areas.
Yeah, I think that this opportunity to essentially go direct to consumer exists in almost every industry, and that's what we're seeing in so many areas. And again, sort of the digital product was the most logical to go first, because you didn't have to work out all the challenges on the back end and actually moving physical product when you were building a direct-to-consumer brand in the digital space, which is why I think we've been successful, because we did that early on in the in the digital space, and now we've started to look at those models in the physical product space as well. And so you touched on Trunk Club, which is which is an e-commerce business that's leveraging a lot of the things that the direct-to-consumer businesses did in the digital space in terms of marketing and in terms of utilizing technology to provide an exceptional experience to the consumer on a very personalized basis. But they have the added challenge of having to, obviously also fulfill physical product. So, I think that's why it's been kind of a logical move for us to go from pure digital companies to sort of physical companies, because we can apply the things that we've learned from kind of a consumer experience and marketing perspective in the digital world to the physical world. And then as you talked, you touched on sort of the SaaS products and some of the analytics businesses and things that we've invested in. Those are largely all things that again sort of benefit our portfolio. And App Annie as an example in the analytics space, they are the leader in essentially app analytics, and the app ecosystem has also just experienced explosive growth as all of these different consumer businesses, essentially, and B2B businesses, but sort of strive to have a more personalized one-on-one relationship with their consumer and to provide a differentiated experience.
So Dana, you personally have spent many years in the Bay Area in a prior life. Greycroft invests nationally, but has offices in New York and LA. How are venture transactions in LA different from other parts of the country, either from a valuation perspective or syndication terms, etc.?
Yeah. Well, our experience is that the Bay Area, pricing and valuations have always just been fundamentally higher. I mean, there's just, it's supply and demand, and I think that there's I'll say oversupply, but there's a large, an abundant supply of capital in the Bay Area. In LA, there's just fundamentally fewer funds that are investing here, and so I think that does tend to keep valuations in a range that are more rational, and there's also I think a desire by a lot of the entrepreneurial community to have local investors involved in their businesses, and there are only so many businesses that you can invest in and manage, and so I think that we do have a great opportunity to invest in great entrepreneurs and at pricing and valuation levels that make sense for everyone. Well, they can fundamentally make a great return, and so can we.
And you're able to do that investing in some companies that are really leaders in their category. In fact, LA seems to have an outsized number of companies that were game changers from a business model perspective. I'm thinking of MySpace as one of the first social networking models, or Overture was really inventing the ad search model. Both of those companies based in LA. I'm sure you're biased,
sure.
but there seems to be a critical mass of doing things differently here in LA.
For sure, and that's something that I've always found really interesting about LA. I mean, I think it is it's a town that is very diverse in terms of industry. Even though entertainment, it feels like it's dominant, it is a very diverse sort of economic base, and it's also filled with creativity. And so I think that's why we've seen a lot of the most innovative models on the internet actually conceived of here. They may have been gone to the Bay Area to scale, but they've really been conceived of here, and I think more and more there's a desire for the, sort of those companies conceived here to stay here. And so I think we're starting to see a trend toward that, whereas, in kind of the first go round, Overture, which really invented the paid search model on the internet, they were acquired by Yahoo, and it made sense, and I think that it was great, and still a lot of the Overture people are here. Ted Meisel, who was the CEO, is still here, and angel investing and advising companies, and a lot of the sort of it did spawn a whole sort of industry. Applied Semantic, which really has been sort of Google's economic engine in AdSense, was invented here by Gil Elbaz, who was a Caltech grad and now is the founder of a company here called Factual, which is in the big data area. And Gil also has a small sort of angel fund here now. Again, Applied Semantic was conceived of here and acquired by Google and then scaled there. But Gil has again sort of gone on to do really interesting things, and his co-founders, one was his brother, actually, Eitan Elbaz, who has gone on to seed and found other companies, one being Scopely, which is a very interesting gaming company that we're an investor in, full disclosure, but it is growing very quickly in the mobile gaming space. And Ava Ho, who's another one of the co-founders at Applied Semantic and then Factual, has now gone on to start a seed fund here called Sousa Ventures with a couple of other Google alums. So, again, those sort of reinvesting back into the community. And now, with the companies that we're seeing that are kind of continuing on, Cornerstone On Demand, which is in the B2B SaaS space, interestingly, was really one of the first kind of application SaaS companies before the word SaaS really existed. I mean, it was one of the first businesses that was essentially sort of built in the cloud from an application perspective, and it's now a $2+ billion public company. And Adam Miller, the founder of Cornerstone, he just hosted last week LA Tech Summit. I think there were about 1,000 people here. All of the major companies were involved, and the mayor came and spoke. I mean, there's a real push and effort by all of these companies to kind of help make LA a hub.
You mentioned Cornerstone On Demand, which had its IPO recently. From an exit perspective, LA really seems to be punching above its weight class. I mean, you've had some terrific outcomes here, exits such as Maker Studios, which you were involved with, the Greycroft company, being sold to Disney, as you mentioned. And within the Fairview underlying portfolio, we've seen Irvine-based Oculus being sold to Facebook for $2 billion. Also some very high-profile companies like Snapchat and SpaceX, based locally. And then firms like TrueCar and Riot Games, a remarkably diverse set of companies.
Yeah.
How has the ascendance of these companies affected the ecosystem and kind of the psyche of entrepreneurship?
Yeah, I mean, I think it's really giving people, giving entrepreneurs more confidence that they can start businesses here and scale them here. I think that, again, LA has never been a city that has lacked for creativity, and so there's been lots of these ideas conceived of here. I think what happened historically is that people would get to a certain point, companies would get to a certain point, and then they'd feel like they needed to either move or sell to scale the businesses, both from an engineering and from an executive talent perspective. And that really is changing. I mean, we're seeing more and more companies now actually recruiting folks down from the Bay Area. I mean, Snapchat recruited Emily White down from Facebook and Instagram, where she was kind of Sheryl Sandberg's protege, had been at Google prior to that. And so she moved down here with her, husband, who was actually a co-investor with me at Trunk Club, and family, relocated here, and so they're now recruiting engineering talent from the Bay Area and executive talent, and I think we're seeing the same thing happening. Scopely has recruited a number of folks from Zynga and other San Francisco-based companies. And so I think that it's really a fundamental sort of shift in mentality that it's like everything when you see people, when you see people that you sort of look up to doing things, it feels possible. It feels, so I think it's fundamentally giving entrepreneurs more confidence that not only can they start things here, but they can stay here. And then I think that gives executives and others that are being recruited to the Los Angeles area comfort that should that company not make it, that there is a plethora of opportunity. And that's really, these are all of the sort of fundamental pieces. Great.
Getting a little bit more micro locally, Greycroft recently moved its offices from Santa Monica to the Arts District, which is where we are now. What prompted that move?
Yeah, so it's interesting. We've been in Santa Monica for really since our inception, and when we started there was sort of nothing. There wasn't much going on in Santa Monica, and Santa Monica is a great town, and the west side is great, but it's also, and for anybody that lives in LA, they understand this. You're also west of the 405, and if you're west of the 405, it's sort of impossible to escape. And the 405 is sort of like this big, huge, giant log jam that occurs, twice a day. And so it just felt like increasingly it was going to be difficult to really expand sort of the overall ecosystem there. And the mayor, Eric Garcetti, has been doing a lot to really promote entrepreneurship and sort of technology investment in LA in general. And so, downtown has been an area where there's been a lot of attempts to sort of revitalize. But as we were just hearing more and more companies talking about moving, into downtown LA and big and small. We decided that we would take a look, and because we were going to move out of Santa Monica, but we weren't sure exactly where. And as we spend more time down here and started to realize that this really feels sort of like I guess it sort of feels like the almost sort of meatpacking district, or sort of downtown New York felt probably 5 years ago, where it just really felt like there was so much activity. It's an area where there's ample room for expansion. The costs are still relatively low, and we're seeing more, more and more startups and also big companies opening up in this area. So everybody from sort of Google to Yahoo to General Assembly and others who are either moving or are strongly considering, and we keep hearing about it, sort of to this area, that it feels like this is going to be kind of a new hub. And it makes sense because it is actually very central. I mean, there's a reason that downtown LA actually is where it is. It's close to the airport, to Pasadena, which is where Caltech is, and where Bill Gross and Idea Labs, sort of the original incubator, started. And so it is a very central location, and with the potential for companies to really expand. And I think, again, when we sort of think about the elements that are critical for this area to really be a hub, it's where you have the possibility to recruit talent from lots of places, not just one small area, to be able to scale up a business on an economically efficient basis, and to be supported by sort of the government and universities for surrounding it.
So lots of great company creation going on, leveraging the inherent creativity that we see all around us in LA. The venture investment numbers are going up. Talk a little bit about some of the constraints that you see to growth in the LA ecosystem that either you currently perceive or worry about in the future.
Yeah, I mean, it's funny. I mean, if you asked me that question 5 years ago, or maybe even 3 years ago, I mean, I would talk about, concern of being able to scale engineering talent and executive talent. I mean, I think it's becoming less and less of a concern all the time. I mean, it is still hard. It is still harder to find and scale up an engineering team here and product team. You just don't have as many companies with big alumni networks, and so you sort of have to work harder at it. But the flip side to that is that there's a lot of loyalty in these in the sort of employee bases of these companies, and so one of the things that we've observed is that you don't have as much turnover, and as you do oftentimes in the Bay Area, where there's such a mercenary kind of culture that has been created, where as soon as people's options are kind of 3 years vested, they're sort of looking to the next thing, and that doesn't exist here. There's a lot of real commitment and loyalty. So I think that's less of a concern. The executive talent, again, there's more pattern recognition as there are more companies who have scaled, and so I think that we do have more and more executive talent, but that will continue to be something that you just need to probably partially recruit in, and then partially it's just a function of time. And then capital. And capital is, I think, at the early stages here is we're actually there are a number of accelerators and incubators. So at the earliest stages, I think that there's a lot of good coverage. Sort of seed funds. There have been in the last few years probably 5 great sort of seed stage funds that have popped up. And then, it's sort of the Series A, Series B. I think that there's still an opportunity. And then the growth stage. And, really, I think we're the only kind of growth fund purely focused on the, sort of technology and media area. With a presence in LA. And so I do think that that's where there's continues to be a need. But again, I really think that all the elements are here now, and I don't worry. I worry about everything all the time, but I don't worry as much about those challenges as I did 3 to 5 years ago.
Turning to the institutional limited partner perspective, a criticism one often hears is that although there's some game-changing and successful companies based in LA, a significant portion of the investor capital comes from the Bay Area or East Coast-based firms, and I think Oculus is a good example of that. Do you need to be invested with a VC firm with a footprint in LA to participate in local successes?
Yeah, look, I think that the reason that historically, at least, a lot of those companies were funded by firms outside of Los Angeles is there weren't firms in Los Angeles. So I think that that's certainly a good part of it. I do believe that as there are just more and more opportunities, more and more companies created, having local funds who can really be hands-on and really help with everything from recruiting to going in and helping with compensation plans and pricing plan. I mean when you can be hands-on and you can have sort of a local partner, I think that that's the strong preference. And so I do think that having firms that have a very strong presence here. And again, we're not purely based in LA, so we've always been LA and New York. But I do think that it's important to have a presence, because while you can point out the companies that have succeeded, that have had external capital, I would say there's probably more that have failed. And the reason for that is that you don't really, if you're sort of in and out of a market, you don't really know what's going on there. You don't really know the players at the same level you do when you fundamentally live in a community. And, at the end of the day, especially at the early stages, venture capital is still a fairly local business. It's not always, and, there are certainly exceptions, but, to have the kind of real partnership that exists when you can go and sit down on a regular basis and really sort of talk through challenges and help think through the strategic plans and hiring and all of the different elements that you need to scale a business. When it can be done on a local basis, it seems to work better. And I think that entrepreneurs largely prefer that. It's a lonely job being a founder and a CEO. So having somebody that you can really sit down with and have those direct conversations, you know, I think is critical.
Okay. What do you think, guys? Any other questions? Or Dana, any question? Anything we should highlight that we haven't?
You know, we didn't talk a lot about the kind of the e-commerce and fashion business, which I think is interesting here. We talked a little bit about, you touched on sort of the video ecosystem, and you know, I think that there's a long way to go still in the video ecosystem, and I think that that will be an area that will have, you know, ongoing investment opportunities into the future, and I think that LA will be the hub of investing for kind of all things video, technology, content, etc. In the fashion area, you know, it's funny, it's one that, you know, again, is kind of overlooked in some regards by the kind of venture community, but you know, LA really is a hub of fast fashion manufacturing, and is, I think, the largest manufacturing, has the largest manufacturing sort of market in the country, and you know, fast fashion has probably been the biggest innovation that has occurred in the apparel industry in 100 years. I mean, it's really fundamentally game-changing. When you know, it used to be season to season, and it would be, you know, 6 to 12 to 18 months sort of lead times on getting a product to market. I mean, that's now shrunk literally to weeks. And so when you think about how kind of game-changing that is, especially in you know, today's environment where people are then buying things directly on the internet and expecting kind of an immediate gratification, you know, LA really is sort of the hub of all of that manufacturing. And you know, I think that we sort of went through the first inning of that, and you know, with companies like Nasty Gal that scaled up quickly. But we're starting to see that in, you know, a number of other areas, ranging from kind of, you know, interior design to, you know, men's fashion, to, you know, again, just sort of really interesting services built on top of, you know, kind of this opportunity for rapid manufacturing.
Quantify that for us, Nasty Gal, for example. Talk about the growth in that.
Yeah. I mean, I'm not an investor in the company, but I think that it went from, you know, virtually 0 to 100 million in revenue in less than 3 years. And, you know, for a company that's vertically integrated, you know, manufacturing, it's pretty impressive, in any case. And it also spawned sort of almost an entire industry around that, where there have been a number of companies that have kind of been copycats since then. And so, you know, and that happened largely because the founder was, you know, in downtown LA shopping at these kind of, you know, all of these sort of fast fashion manufacturers that were largely producing the same thing on an unbranded basis. And she just created a brand around it and would literally just go, you know, from door to door basically, and just comparison, you know, sort of shop. And then brought that concept, you know, online with a great marketing presence. So I think that you know, the opportunity kind of in the fashion business really, I mean, it's a massive industry, and it will continue to undergo change. And so I think that there will be some really interesting companies that will come out of LA in that area.
Dana, I really want to thank you for spending time with me today. This was a fascinating discussion, and really value your insights. We at Fairview really cherish the relationship that we have with Greycroft, and look forward to your continued success.
Thank you. Likewise.